On this week's episode of Elevate Your Wealth, we're going to be talking about how slow and steady can be very, very successful when you're trying to fund your retirement. Also, some fun things with different perk programs that a lot of you may not be familiar with, and then understanding mean reversion and what we have to do to really protect our retirement. That and so much more on this week's episode of Elevate Your Wealth.
And now, Elevate Your Wealth with Mark Stimpson and Casey Elkins.
Welcome into Elevate Your Wealth, hosted by Mark Stimpson, Casey Elkins, and Steve Flynn. Elevated Financial Management, the power behind this program. And again, located right here in Seattle, well over 42 years combined experience between these three. And it's all about retirement, getting you ready. Certified financial fiduciaries, yes, they are. I'm Morgan Patrick. My pleasure, as always, to jump on and talk about just the importance of being proactive, being prepared, having a plan. We also give you an opportunity in the middle of all these interesting points about retirement to jump on the calendar with Elevated Financial Management and grab one of their complimentary appointments. We'll tell you about those as we move through. But gentlemen, as I always do before we jump into our first discussion point, Casey, we'll start with you. How was the week?
Oh, it's been great. Yeah, we've been really busy. As we continue to talk about new people in the office, which is exciting, and we've been able to help some really nice families recently, which is great. And it's been going really well. We're just waiting on our office expansion. We're adding 5 more offices, but it's a work in progress to get that additional space here in the building. And, things are going really well. Anything you guys would add to that?
Oh, yeah. All I'm going to say is the Mariners and the Seahawks are winning, baby. Mm-hmm. And we got one of the hottest baseball teams. The last push for the playoffs is upon us, and we are excited about that in this office. I will say that. So looking forward to the next few months.
And I know, Mark, you were on the batting field at the Mariners. Would you share what happened?
Well, I went down actually to our team in Tacoma and did a little bit of our AAA affiliate. So that was
took
fun.
Some BP? You took some BP?
Actually, the first time I've been on the field and done that.
You're not in traction?
Yeah, exactly. I hadn't picked up a bat since my softball days, so that was fun. Hit some balls, and it's exciting to have our teams winning. So it makes a lot more fun around here for sure.
Well, I tell you, when you you need to live your life. You need to, and I think a lot of people feel like we get on here and we talk about retirement. And that's all we do: numbers, numbers, numbers. These guys are human. They go out on the weekends. They go to the games. They go to the local restaurants. You're going to see them out and about here in Seattle. And I tell you, having an opportunity to work with Elevated Financial Management, having that peace of mind when it comes to your retirement, what a stress reliever that is. And there's so many of you out there that have done an amazing job of putting the money away, creating that nest egg, saving and saving and saving. And now all of a sudden, what are you going to do with that? How are you going to access that as you move into your retirement years? You need to have a plan. We'll tell you how to get on their calendar here in just a little bit. So, guys, you gathered some interesting articles to talk about this week. The first one, Slow and Steady Wins the Retirement Funding Race. Wade Pfau, one of our favorites. Mm-hmm. Mark, you saw this. You said, we're starting off with this one.
Yeah, this is one that Casey and I really believe a lot in because, if you don't plan this right, and we tend to want to set up income off of what we call the red bucket or just our investments in the market, it can be a problem. And we have a lot of respect for Dr. Wade Pfau. This person has studied retirement for several decades, and he knows what he's talking about. And I just love the fact that he's in this article, he's talking about the need. He makes a neat point here. He says, the sum of your retirement liabilities is literally how much you need to retire. And he uses something called the funded ratio. We're not going to get into that part of it because that's not the important things we want our listeners to pick up from. But here's what he says that I believe is so critical over the long term. There's 4 major factors that we all need to worry about. Number 1, longevity risk. Casey and I have been talking about longevity risk forever now. We call that the risk multiplier. But he says to the ability to maintain consistent and sustainable spending for core retirement expenses. So you're going to use something fixed in that regard. Then there's the lifestyle. These are all words starting with L2, which is pretty cool. Discretionary expenses like vacations, they can be dispensed with funds, that we have in different accounts. They don't have to come from a fixed account, could come from a variable account. Then it's your legacy, what you want to end up leaving to our children, charities, grandchildren, and so forth. And then the last one is a very important one. That's liquidity, having sufficient reserves to deal with just day-to-day life, really. And that matches kind of our bucket strategy on all our conference rooms. We have a wonderful glass board that we share with our clients, red, yellow, green. And this is exactly really a lot of the things that he's talking about in this article right now.
It is, yeah. And you know what? I really appreciate Wade Fowl. I mean, one, he's very, very sharp. Yeah. Two, he does a fantastic job of talking about income, because that's really what creates success in retirement. And so, he's always bringing something new to the table in terms of income, and it's valuable information for us as advisors, right? There's the technicals, the details that we really get into, but he also does a nice job of explaining things in a way that maybe your average, air quotes there, average investor can also put into practice and can understand what he's talking about, right? Doesn't talk over people's heads unless he's at an event that it's all financial advisors, because I'll tell you what, that's a different scenario. Yeah. But anyways, the idea here being that he mentions the idea of having certain expenses, like just your normal day-to-day fixed expenses, taken care of by something guaranteed, like your Social Security, right? Mm-hmm. And you know what? I mean, that's one of the most valuable thoughts that I think really we can talk about, because if you are going to have consistent expenses through retirement, why not make sure that they are guaranteed to be covered? And then that allows us to protect a certain piece of the assets to create that income. And then we can use other dollars for our discretionary spending. We want to take this trip. We want to do these things. Mm-hmm. And we're okay with a little higher level of risk with those dollars, because those are not things that we have to do, right? They're discretionary. And so that allows us to start to build a plan for somebody where we're segmenting the risk. What we see all too often is people come in and every dollar they have is invested in the same way or with the same amount of risk. And they don't have protection. They don't have diversity. And we've talked about this before, but I want to say it again because it's so important. Just because we have a lot of holdings, does that really mean that we're diverse, right? Okay. It's the same as, I always like car analogies, right? I'm a car guy, so it's easy. You could say, well, I have a diverse collection of cars because I have 20 different vehicles. But if they're all Chevy Silverados, there's no diversification, right? And it's the same thing. We see people come in that have 20 holdings in their portfolio, but they all react the exact same way. And there's no way that is going to create retirement success in whatever the future holds. In some scenarios, it will if the market continues up. But if the market staggers or struggles or has a decline, it starts to change the narrative. And so this is where we have to have this conversation about what type of risk we're taking and how we're invested.
I just want to add, you said it, and we've talked about this before. It's the income that is so important when you get to retirement. But Casey, you said it. Mark, you've said it many times. Just put guaranteed on the front of income.
Yep.
And how that is that peace of mind we talk about. Guaranteed income. It's all important to have the income, but the guaranteed income is where you sleep at night.
Mm-hmm. It's funny you mentioned that, Morgan, because he talks about that here, that when it comes to longevity risk, covering the basic expenses like Casey mentioned, food and housing, he says it should be covered by insure investments like, here comes the A word, annuities or bond ladders, right? Something that's going to be guaranteed. And we're going to definitely be talking about this more.
I think this is a great time, right? Essentially, Morgan, I know you're getting ready with the phone number. So for our listeners that are, wanting to figure out what their retirement looks like, that want to figure out what type of risk they're taking, when should they start Social Security? realistically, what you're trying to determine is, how do I create a plan? How do I make sure that I'm successful in retirement? What are those options and how can I go about it? This is your chance to do it. We will sit down and have a complimentary review of your investments. We'll start to build a plan for you, and we'll talk about how you want to create the income. Again, what type of risk you can take and what type of risk you should take. And how do we make sure that we're tax efficient? All of these things are part of our complimentary portfolio analysis as we design that plan for you. Don't hesitate. Pick up the phone. Give us a call.
Work with professionals. This is your opportunity to do so. They are fiduciaries. This is no cost, no obligation appointment. Get to know the team at Elevated Financial Management. Call this number. Secure one of our 10 appointments, 866-668. That's 3625. 866-668-3625. You're leaving the checkbook at home. Again, you're not agreeing to become a client. This is a great way to get to know Mark, Casey, Steve, the entire team at Elevated Financial Management. 866-668-3625. 10 appointments. First 10, you're in. If you're outside the top 10, we'll put you on a short wait list and we'll get to you within the next 2 weeks. 866-668-3625. We've got more coming up on Elevate Your Wealth. We are back on Elevate Your Wealth, powered by Elevated Financial Management. You can find them right here in Seattle. Our hosts, Mark Stimpson, Casey Elkins, and Steve O. Flynn. And you can find them at Elevated Financial Management, over 42 years combined experience between these three. And it's all about helping their clients get ready for retirement. Certified financial fiduciaries they are. I'm Morgan Patrick. Just a pleasure to jump on and talk about just the importance of being prepared. Ready for retirement, have the plan, have the roadmap, so to speak. So, gentlemen, before we get into answering the big question, let's talk about the book, Break the Glass.
You know, this is a book that Mark and I wrote. We're really proud of it. It took quite a bit of time. Obviously takes a lot of effort on our part. And, I think the reason that we're so excited about it is because it's really meant to be for retirees, right? It's not a textbook. It's not meant to be impressive to other advisors. That's not the purpose of this, right? The purpose is to give folks that we work with and others that listen to the show that just want to learn some way that they can start to figure out what things are important as you're approaching retirement. And, the name of the book I think is interesting too. And so I think that's something that we should mention, just in that, break the glass, right? What it really comes down to is that what we see a lot, people come into the office and they're just worried about retirement, and they kind of don't know where to start, right? Do I change my investments? Do I buy this? Do I sell that? Am I diverse? How do I deal with taxes? How do I keep up with inflation? What do I do for Medicare, Social Security? Essentially all the things that we talk about on the show, but it makes people feel frantic, Morgan. That's really what it does, is it makes people feel frantic. And so we kind of relate that to like a fire, right? When there's a fire, things feel frantic and you don't know what to do. And so we named the book Break the Glass, Fireproofing Your Retirement, because the idea is that you have to get started, right? You have to start somewhere. You have to break the glass. You have to take action. And so with that, we're really excited again to bring this. And this is something that we're going to include whenever anybody comes into the office to come and see us and have this conversation that we're always talking about on the show. That's an opportunity for them to get a copy of the book as well. And so, again, just really excited about it. I don't know if you'd add anything to that, Mark, but I think it's great.
Yeah, and the book just really discusses general concepts, right, to help everyone, as Casey just mentioned, begin to figure out retirement and what to do, because there is a lot of different levers to pull at different times, right? We know that. We talk about that. And that's what I want to go back to this article a little bit, because the big question is, everyone wants to know, how much do I need to retire? And there's a 5-step process, and I just want to highlight these things really quickly here. Number one, you need to calculate your budget for retirement, right? You've got to figure that out. You need to know what your spending is. We would figure that out, help you with a cash flow analysis we would do. Then you need to quantify any of your legacy concerns. What do you want to do as far as leaving money to your children and any possible contingencies that could come up over time. We know that changes when it comes to legacy planning. Then we need to identify, number 3, assets available specifically that we're going to use for retirement, right? A lot of us are going to have a 401k or a 457 or a 403b, maybe cash. We need to figure out what those assets are and specifically how we're going to use them. Then we need to calculate the funded ratio, which I love how it simply makes it. It's retirement assets to retirement liabilities. Pretty simple, right? How much you're going to have total in retirement from your assets, and then how much it's going to take you to pay your bills, all your liabilities. And then the last one is for those that are underfunded, you've got to assess how to get back on track. So those are really important, those 5 things. And if we pay attention to those things, we're going to be able to fund our retirement in a successful way. And I think that's so important that we're able to do that. And again, we talk about all of those principles in our book. So if you come into the office, you're going to get a copy of that when you come in.
Well, and I think it's important. You guys have said this before. How much do I need to retire? I mean, everybody's going to be different. So you need to have a customized plan and have that question answered for each individual or couple that is retiring. You're locked in, of course, to Elevate Your Wealth, powered by Elevated Financial Management. That's where you can find the guys, Mark Stimpson, Casey Elkins, Steve O'Flynn, and their crew. And it's always about preparing Seattle for retirement. The opportunity to get on their calendar, get into our top 10, complimentary appointment, meaning leave the checkbook at home. It means no obligation, meaning you're not agreeing to become a client. This is a great way to see if you're on track for retirement. Call the number, secure an appointment, 866-668-3625. And if you book that appointment, you're going to get a copy of Break the Glass, their book. Again, we've been talking about it today. 866-668-3625. All right, we're going to transition. And I'm just going to take a wild guess that Mark came up with this one. Adventurous shareholders will enjoy these perks. And the quote from the article, no one loves free stuff more than rich people. It's a perk, right? You buy something, you get something. Mark, why did this jump out at you? Are you a perk seeker?
I am. I'm going to actually pawn this off over to Casey because he had a lot more to say and wanting to use this article this week. But I think there's some really cool points in here that Casey's going to highlight because there is some cool perks out there that maybe you, if you're listening, you don't know about. And I think it's worth sharing, wouldn't you say, Casey?
Yeah, I think what really is cool about this is it's just a little different take, right? It's not maybe the standard financial discussion, but as you're approaching retirement, right? It's all about designing a plan that fits you. And so we have a couple of clients that actually take advantage of these things that are mentioned in the article, being that, like, for example, if you own a minimum of 100 shares of Carnival stock, then there are certain benefits that you get when you go on a Carnival cruise, like a spending, like they'll allow a certain amount on a booking, they'll give you a free upgrade, they'll allow you to have certain things. And there's a number of other companies that do that too. And so again, it's really about what's the right thing for you, because at the end of the day, 100 shares of Carnival stock is not going to make or break your retirement, right? And same with IHG, which is Intercontinental Hotels Group. So like Holiday Inn is a part of IHG, right? There's quite a few that are. And so, if you're somebody that wants to travel a lot and you want to take advantage of those types of perks, if you structure it the right way, you can get more for your money, right? Which, gosh, in today's economy is really important, right? When we think about inflation and making our money last through retirement. So if there's a way to get those benefits, a couple other ones, Royal Caribbean Cruise Lines, I think that's great. Again, you've got to have 100 shares, but it makes you eligible for an onboard spending credit. And so, again, it's just all about playing the right pieces in the right way. And we're not going to go through each one of these, right? And not only that, but there's more available than what shows in the article. But I think really just the key is, do you have a plan that fits you, right? Do you have a plan that accounts for these types of things? Do you have a plan that is custom tailored to what you are trying to accomplish in a way that fits you the best way possible? It makes me think right now about we're approaching the end of the year, And so it makes me think about Roth conversions and QCDs. I mean, those are time-sensitive things. So are they things that you have discussed with your advisor? Is it built into your plan? Because it should be, right? And so I think that's really valuable. And I'm sure you have some things to add on that, right, Steve?
Yeah, certainly. And as we've said before, Roth conversions are not necessarily always best for everybody. It's a bit of a buzzword. But yeah, it's certainly to be mindful of, especially as we've got a deadline of the 31st of December to take care of Roth conversions. There is, as part of the One Big Beautiful Bill Act, low taxes, low income taxes, so could take advantage there. Mm-hmm. And the other is a standard deduction. So if you're aged over 65, it's $6,000 per person, $12,000 for a couple. In that unique situation could be another reason why you might explore a Roth conversion.
Yeah, exactly, right. So I mean, there just are different things that can be done. And I think, again, it all comes back to having a plan to make sure that, that plan suits you and that it's best designed for you, right, Mark?
Yeah, so if you're listening, pick up your phone, give us a call, because what we're going to do is we've got a team that's going to look at your individual circumstances, and we're going to take a deep look at your taxes. A lot of firms don't want to deal with tax planning. We do here. What are you going to do with Medicare? I'm actually dealing with my mother right now, who's pretty sick. She's 91 years old, and so there's a lot of planning and having documents in order. I can't stress the importance of that right now. Having durable powers of attorney, all of the things that we need to have in case the unexpected begins to happen to our loved ones or to our own immediate family as well. So again, pick up the phone, give us a call. Let us help put together retirement for you that you're going to be very happy and glad that you've been working with someone that knows a little bit about these different subjects, because it can mean all the difference between having a successful and possibly an unsuccessful retirement.
Call this number, 866-668-3625. That's 866-668-3625. It's a complimentary appointment, meaning no cost. There's no obligation, meaning you're not agreeing to become a client if you can grab one. Again, 10 of them, 866-668-3625. They'll go fast. We're back right after this. Elevate Your Wealth, powered by Elevated Financial Management, found right here in Seattle. Your hosts are Mark Stimpson and Casey Elkins, along with Steve Flynn. They've got over 42 years combined experience in the retirement planning business, helping their clients get ready for the big day for retirement, and they are certified financial fiduciaries. I'm Morgan Patrick, and absolute pleasure. We jump on, and whatever's happening in the retirement planning world, right? And it's always moving and shaking. There's new stuff every day. We talk about the latest. We give you that information. You're going to have questions about your own retirement scenario, your situation. We give you an outlet for that. It's called an appointment. It's called complimentary. We have 10 of them each week here on the radio program. Here's the issue for you. There are only 10. So if you call and you get into the top 10, you're in that week. If you get outside the top 10, you'll go on a short wait list. We'll get to you in the next couple of weeks. But you can get to the front of the line simply by calling 866-668-3625. That's 866-668-3625. It's a complimentary appointment. See if you're on track for retirement. So, gentlemen, you brought this to my attention, and the article is Understanding Mean Reversion and Can Make or Break Retirement. Why did you select this one, and why do you feel it's important?
Yeah, I think that this is great because we've talked about recency bias before, Morgan, right? So a lot of people do have a recency bias in that the market has done well for over 10 years at this point, right? I mean, close to 15 realistically. There's been a couple of blips in that time frame, like COVID, but realistically it recovered so quickly that I think ultimately it's given people kind of a false sense of confidence at times, thinking that that's how it's always going to be. But reversion to the mean, or mean reversion, is essentially that if we have a trend over time where the stock market has averaged 6 or 7% a year, that kind of thing, and it's done better than that recently, that eventually it will do worse than that to get the average back to the middle. Not that that's really the intent, but that's what the statistics show, right? That's what the numbers show. And we're numbers guys, right? And I think that's what's so important about this is I really struggle when I see plans from other advisors that show average rates of return of 8 or 9% into retirement. The amount of risk that you have to take to be able to do that is more than you should be taking if you're in retirement. And of course, it looks really good on paper, but that doesn't make it reality, right? And, we use lots of different planning softwares here at the office. Steve and I were using one the other day. And realistically, that software showed things that we really don't think are realistic. It took the last 10 or 15 years of the market and replayed them into the future. And the last 10, 15 years of the market have been really good, right? So at a certain point, the law of averages will come back into effect, right? And I don't think we're going to see sustained 10+% per year in the stock market. And I don't think that we are. And even if we do, the amount of risk that you have to take to capture that type of return is not appropriate for the money that's inside of your account if you're in retirement or approaching retirement, right?
So let me ask you this. So if somebody's out there and they're shopping around, they want to work with somebody, they want to work with an advisory group, and some of this is being thrown at them from other sources, it's almost like they're making that package really, really pretty from the onset to get the business. So, telling the listeners out there, the potential clients out there, that you really need to kind of dig in here and understand that this pretty little picture that's being painted, it might not be as pretty as you think it is.
That's it. Yep, that's exactly right.
Well, and that's just it, because I think over the longest period of time that telling people that they could average right around 7% adjusted for inflation goes clear back to like 1871. We know that there's a lot of truth to that. That's proven that to be over time. But again, it's timing and the age of the client that is so critical here, right? Because what has to change as we get older are two things that I think are so important. One is sequence of return risk, meaning what the market does as you get in that retirement red zone, right? We talk about it all the time, right? 5 years prior to retirement and then 5 years afterward, right? So you got sequence of return risk, but longevity risk, right? Which is going to bring in health care and other issues that if you don't plan for that and all you're talking about is average rate of return and growth, it can devastate your plan, and your money is flat not going to last in this regard. And I think you've got something to add to that, Steve?
Yeah, and when we do have people in the retirement red zone or in retirement, we're a bit more realistic with our projections. We don't just run a number. We really like to show them what happened in 2008 and how would they feel? How would you feel if you saw your money like drop in half, and how would that affect your retirement? So we do like to be a bit more realistic, and we certainly don't want our retirees to have to go back to work. So we do want to double check their risk tolerance, their comfort for risk. And
Yeah, no, that's a really good point. It is important that we continue to have that conversation. There's something that this article brings out that I think is really interesting. It's called the Sports Illustrated jinx. And I won't use the exact example that's in the article. I'll use one that hits a little closer to home. The Mariners have points in the year where they'll win 6, 7, 8, 9, 10 games in a row, right? That's awesome. Does that mean that they're going to continue to win 10, 11, 12, 13, 14, 15, 16, 20 games in a row? No, of course not, right? We all recognize that it would be crazy if we thought, oh, well, they've won the last 10, so they're going to win the next 10, right? It's the same with the market. We've won the last 10 or 12 years. Why would you think that that means you're going to lock in winning the next 10 or 12? It's not realistic, right? At some point, things will revert to the mean, back to the average, back to what we would kind of expect, which means that for the 10 or 12 times that the Mariners win in a row, they're probably going to have times that they lose 6 or 7 or 8 in a row, right? And we've seen that to be the case. The point is, in their circumstance specifically, that at the end of the year, right, they've won more than they've lost. That's the idea. And hopefully more than the other teams, Astros. But that being said, right, we want to make sure that we're being realistic about our expectations, not only with our sports teams, but specifically with our returns in our portfolio, because those type of unrealistic expectations set people up for failure.
So you're out there, and maybe you're in this category. Maybe you have unrealistic expectations on your portfolio, and now you're thinking, maybe I need to protect myself. Maybe I need to plan a little bit better, a little bit harder, a little bit more detailed. The opportunity to do that, and again, a lot of you out there might be working with somebody. It's okay to go and grab a second opinion. Call our number. We have 10 appointments. They are complimentary, no cost, no obligation, meaning it's a second opinion just sitting there waiting for you. 866-668-3625. See what's going on with the portfolio. 866-668-3625. And if you haven't started planning, this is an excellent opportunity to just ask questions and get answers back. And it's complimentary. And each appointment book going to get a copy of their book, Break the Glass. Great read, Break the Glass. I have my autographed copy. So, I just highly recommend the read. But grab one of the complimentary appointments. We'll throw the book in as well. 866-668-3625. So understanding mean reversion and how it can absolutely break retirement. And I think it's a very interesting discussion because we do get caught up. We're riding that wave to the beach, guys. We've been at the top of the wave for the last 10 to 15 years, and eventually what happens to the wave? It hits the beach.
Mm-hmm. Yeah, and that's exactly right. And there's a wonderful thought that I want to just focus on for just a minute. We need to focus on what we can control. Everybody wants to try and time the market right. We know how hard this is. Nobody can do it. Anybody that says they can just run the other way, right? So we can't know for sure whether the movement of that equity is going to be forward or backward, right? But if you have a plan that allows you to be okay when the market is running the wrong way. So let's say it's backing up on us, right? It's going the wrong way. We're beginning to see a correction. That's why we need to have assets that are truly non-correlated, right? They're not going to be, as we talk in our appointments all the time, they're not dancing together. So the income has to go down because you have everything tied to the market. So again, a plan is going to allow you to be successful in an up or a down market. And we can't overemphasize the importance of that, because if everything that we want to do to create income is going to be tied to what our red money or the money in the market does, we can set ourselves up for a little bit of a spanking, and it can hurt, right? And again, we're not going to allow our clients to do that. We want to have guaranteed income that they can count on no matter what the market is doing. Steve?
And one of the services we do provide as part of our analysis is to review our clients' assets or our somebody who comes in to see us. We look at their assets together and report back to them on whether they're diversified, whether all the assets are correlated or not, and certainly what kind of risk they're taking on. So I think our people that come and meet with us find that really, really helpful.
Yeah, they do. That's it, right? Is that review, because we always want to make recommendations from a place of understanding and a place of knowledge, right? So we don't sit in our first conversation with somebody and start making recommendations about move money over here and let us show you this great investment that we have. It's not a sales pitch, right? That's the point here, right? Is it really is about what do you need, what do you want, and how do we start to accomplish that? So we start from an analysis, and this is your opportunity. For folks that are listening, if you've been listening for some time and maybe you've been hesitant to call because you don't know what to expect, we get that, right? We understand, and we know that realistically the financial world at times has had a black eye because there are those that have given us a bad name, but we work so hard for that to not be the circumstance here at Elevated. So if you want to get a plan, you want to talk about your risk, you want to talk about what the future looks like and how to create success in your retirement, and get a copy of our book, Break the Glass, this is your opportunity to do it. Don't hesitate. Pick up the phone. Give us a shout.
And it's customized to you. So call this number. We've got 10 appointments. Get into our top 10. 866-668-3625. That's 866-668-3625. No cost to this. You're leaving the checkbook at home. No obligation. You're not agreeing to become a client. This is an opportunity to educate yourself, empower yourself, Understand what you have in that portfolio you're sitting on, or maybe the current plan that's a little stagnant. Get a second opinion. I mean, understand where you currently sit. 866-668-3625. That's 866-668-3625. First 10 in. The next 10, you're going to go on a short wait list. 866-668-3625. It is complimentary. We've got more Elevate Your Wealth coming up after the break. We've got scenarios. Welcome back. It's Elevate Your Wealth, powered by Elevated Financial Management, hosted by Mark Stimpson, Casey Elkins, and Steve O'Flynn. I'm Morgan Patrick. My pleasure to jump on with the guys. And again, it's always about the importance of being prepared, having that plan. This group, over 42 years combined experience in the retirement planning business, helping their clients get ready for the big day and beyond. It's all about that plan, that roadmap. Again, certified financial fiduciaries. The book is Break the Glass. We do have appointments. They are complimentary this week. And every week we have 10 of them. If you get into the top 10, you're in that week. If not, you'll get on the short wait list, and we will get you in the next couple of weeks. But each appointment booked is going to get a copy of their book, Break the Glass. All right, so guys, scenarios. These happen all over the country. We've gathered them. Let's see how you would handle it. Mark, we'll start with you, and here it is. They imagined more naps and golf, but somehow their days are filled with babysitting, volunteering, and leading the HOA board, and they're getting a little burned out on all that. How can retirees find balance between staying active and protecting their time and energy in this new phase of life?
You know, this is something that it's interesting. This scenario has come up with some clients recently. We've had these discussions with them, and, you know, until you actually do it, right, I don't think we've totally understand everything that's going to happen, right? And that's why we're talking with our clients on a regular basis now about what they want to do in retirement as part of their plan. We take the money. That's important. We've got to deal with that. But we believe equally important is the emotional things that are going to come up when it comes to retirement. That's kind of like what we're talking about here. It's easy to get burned out. Some think that they're going to play golf. Morgan, you and I might want to play 5 days a week, but for a lot of people, golf isn't going to be that many days a week. And for some of us,
I don't have the time to fill that many divots personally. I'm not your guy.
Yeah, exactly. Casey be digging a big hole and make his own sand trap.
Just give me a shovel.
And a pail. But, you know, that's the thing. So, for a lot of our clients, babysitting and being able to spend more time with the grandkids is awesome. That's what they want to do, right? But there is a balance, because you can burn out if you're not careful about, you know, your time and what you want to spend it on. But what I will say to this, it's all about finding something that you would like to do. How many times do we talk about retiring not from something but to something? And if you are able to fill your time with what you love, or a hobby, or family, whatever it might be. We've got some clients that are loving to work just a little bit, right? Part-time. We call that a hybrid type of retirement. So again, I do believe that the clients that are staying active mentally and physically, we are seeing them have the most successful of all of our clients' retirements, right? Because they're using their mind, they're using their muscles. If we don't use it, there is an old saying, use it or lose it. And there's a lot of truth to that. I think you'd agree with that, right, Casey?
Yeah, absolutely. You know, I mean, it's called atrophy, right? And I'll share a story. So I've experienced that firsthand. I broke my right arm when I was a kid, and it's in a cast, right? So you don't use it. It came out of that cast, and it was real tiny compared to my left arm, right? And, being a young and dumb kid, I got the cast off and broke my left arm 2 weeks later. So that's a story for another day. But the point being, right, that is a real thing. And that's the same case with our mind. That's the same case with our body. If we don't use it, it does start to disappear. It's a muscle, right? And so like this example, right, of somebody who's, doing all these things. In that circumstance, it's actually really good, right? They're very active, but it doesn't sound like they're active in the way that they want to be.
They're
right?
not happy.
Yeah. And so that, again, that's where, that kind of self-reflective, introspective look at what's going on and how you deal with things and how you plan. And, that's one of our biggest questions that we have for folks is, what do you want to do in retirement? And we like to be specific with those answers. And sometimes people don't have an answer to that question. And that's okay. It just means that it's something that needs to be thought about. It's something that needs to be discussed. And we have had a client, and I will give a direct quote that said, I want to sit it on the front porch and watch the grass grow, right? That was his dream of a successful retirement. And you know what? He's doing it. And he loves it, right? And that's great. And he's self-reflective enough and introspective enough to know that that is what he wants, right? But if you're not that person, if you want to travel and you want to do this and you want to be out there doing things, it takes planning to accomplish that. And it takes self-reflection to be able to figure out exactly what you want to do. Otherwise, you will end up sitting on the porch watching the grass grow. And that may not be your dream in retirement, right?
What I want to say to that is this specific client has a spouse that doesn't want to watch the grass grow. She does want to travel. Mm-hmm. She does want to do the exact opposite of what we just talked about. So that can create some friction.
That's true.
If you don't talk about it and you figure out a way to keep both happy. And it sometimes, how many times are we amazed when a client, a husband or a wife, will look at the other one after being married for 40 years or longer and go, I didn't know you felt that way, right? We've heard this on multiple occasions. And so, again, surprises or goals need to be talked about when it comes to retirement, right? Because if we don't, somebody's going to end up being unhappy, and it's going to lead to maybe stress and anxiety and problems that, had we figured this out kind of ahead of time, we can figure out what we need to do to keep both parties happy, because that truly is our goal when helping someone.
Yeah, I mean, most frustrations in life can probably be attributed back to poor communication and bad expectations, right? Sure. And so as a couple, you're approaching retirement, talk about it with each other. What do you want to do? What do I want to do? How can we do things together, right? That kind of thing. And it just starts with the conversation. And that's the same way we do it here. It all starts with the conversation.
Yeah, I think there are a lot of people out there that fit into this category. You get so focused on the nest egg and having enough. But the purpose after you retire, what are you going to spend your time doing? That's a big part of it. And a lot of people don't put enough effort into that thought process as they move towards retirement. It really needs to be part of your overall plan. And Mark, you brought it out. I mean, there are couples that get to this stage and they have different thoughts on retirement. You need to have those conversations early and plan for it. Now, the opportunity to have a conversation with Elevated Financial Management about your retirement, it's complimentary. Grab an appointment right now, 866-668-3625. We have 10 of them. Get into our top 10. Again, there's no cost, no obligation. If you don't make the top 10, you'll go on a short wait list, and you'll get in the next couple of weeks. But you can get in right now, 866-668-3625. All right, next scenario. Steve, this one's to you. Their expenses are lower than the plan predicted, but they still feel like every dollar spent might be their last. What can help retirees find peace of mind when their portfolio says yes, but their mindset says no?
Well, that sounds like a classic case of the red bucket. So you may hear us talk about the green and the red bucket. That seems like their retirement assets are probably all in the red bucket. And they're like, I'd like to take a trip. How's the market doing? And if it's down, they may have to forsake the trip. But again, if it's up, then maybe they can do that. We like to provide a solve for that, and we call it the green bucket. We talk about income. And we talk about allowing enough money for your minimum needs in retirement, but also once that's solved, then we can use different assets to go in different places. So one of the things that I know Mark likes to say is maybe they're looking to spend $5,000, for example, in retirement. And Mark says, but what if you could spend $7,000? How would your retirement look like that? Would you actually spend it? And so solving the fix in the green bucket and really trying to take your retirement out of the red is...
Yeah, I think that's important, right? Because what every client tends to do is they pare their life down to what their income is, right? And so we're of the belief that we want to set our clients up with more income, especially in the early years. We call it the go-go years, right? Because it's go-go, slow-go, and then no-go. And I'd rather have more of my money on the front end when I can do things, travel, whatever it might be that I love to do. So again, if we create more income for them, we've never had one client ever come back to us and say, you know what, guys, you created too much income for us. Can we give some of it back? It just doesn't happen that way. So for us, the more income, the better, right? It's never the other way around. So again, we want to help people create income that they cannot outlive and is going to allow them to do the things that they work so hard for and they dreamed about doing. But it all boils back to income.
It really does, right? I mean, that's the same thing that allows you to go live your life when you're working, right? The difference is you just have to go to work to get the income. When you retire, you don't want to have to go to work to get the income anymore, right? So two things change. You have less income and you have more time. Less income is a real problem. More time is awesome, right? And what do people generally do with more time? Hopefully go live more life, which inevitably probably takes more income, right? So creating the income is so important. That is the bedrock. That's the foundation for a successful plan. And back to what Steve was highlighting is that's what gives people the confidence to actually go live their life, right? It never feels good to call your advisor and say, hey, Jack, could you send me $5,000 out of my account? It doesn't feel good, right? It doesn't. That's money that you worked for, and it's kind of painful to go through that. And so we want people's income to be set up. They receive that income on a monthly basis. They go spend it. They enjoy their lives, and that's what's going to put them in a spot to be able to have fun and do the things they want to do in retirement.
Well, let's open it up. We've got appointments. Mark, walk us through what's going to happen.
Yeah, if you're listening right now, please pick up the phone and give us a call. We've been talking about the need for income. Do you know what all of your sources are going to be? Are they going to be guaranteed? Is that income going to be, when should I take that income out of certain different buckets? What about my Medicare? Do I go on a Med Advantage or a Med Supplement plan? There's legacy planning that we want to, if we've got children or grandchildren, what's the best way to move money to them? What about any estate planning? Do we need a trust, or is a will going to be sufficient enough? There are so many things that we can talk about and help your retirement be very, very successful. So please pick up the phone, give us a call. Let Elevated Financial Management help you.
That's it, folks. We have 10 appointments available right now. 866-668-3625. That's 866-668-3625. Each booked appointment get a copy of their book, Break the Glass. Again, this is an opportunity for you to come in and talk about your retirement scenario. There's no cost to this. There's no obligation to this. See if you're on track for retirement. 866-668-3625. Another edition of Elevate Your Wealth is in the books. For Mark Stimpson, Casey Elkins, and Steve O'Flynn, I'm Morgan Patrick. We'll see you on the radio next week.
Investment advisory services offered through Foundations Investment Advisors, LLC, an SEC-registered investment advisor. The content provided is intended for informational and educational purposes only. The views, statements, and opinions expressed herein are those of the individual speakers and not necessarily those of Foundations and its affiliates. The information contained herein does not constitute an offer to sell any securities or represent an express or implied opinion or endorsement of any specific opportunity, offering, or issuer. Any discussion of performance or returns is not indicative of future results. Each individual investor situation is different, and any ideas provided may not be appropriate for your particular circumstances. Foundations only transacts business in states where it is properly registered or excluded or exempted from registration requirements. Registration as an investment advisor is not an endorsement of the firm by securities regulators and does not mean the advisor has achieved a specific level of skill or ability. No legal or tax advice is provided. Always consult with a tax professional. All rights reserved.